Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update. And today we're going to talk about what's the spring going to look like. Now we've sprung forward on our clocks. What's the real estate market? Are we springing forward on the real estate market, or are we dropping back? Well, first off, I can tell you it was a little slower January, but that is normal. You know, let's look at this chart and you can see that basically every year the market drops down, but then look what happens from January. The arrow is where it's going from January to February, and expect the same thing. And when the numbers come out for 2026, you're going to see February pop up also. And a lot more inventory. You're going to see when we go down to the cities, how the inventory is growing. And that's what normally happens. A lot of new inventory comes on the market during the spring. You can see it March, April, May, and then it kind of peaks in June. And then obviously it starts diminishing down towards the end of the year. And we're going to talk a little bit more about the timing of everything, because again, even though more inventory hits the market, it's a great time to have your home on the market. This is where normally prices are stronger, because this is where the buyers are coming out. And even though inventory is growing, the buyers are outpacing the inventory right now. So what will happen is, as more inventory goes up and we climb, the buyers, like every month more and more inventory is coming up. And so pretty soon, instead of having, one buyer for every 2 homes, we're gonna have one buyer for every 3 or 4 homes, and it's a little bit tougher to sell. So definitely as a spring is the best time to have your home on the market. And that's how you see that, like in this graph, more and more homes are coming on the market. Inventory is making a comeback. We talk about that this is kind of a normal market. When I say normal, I go back to 2017, 18, 19, because, starting with the pandemic, and then obviously what happened, when they lowered the interest rates to under 3, and basically the real estate market was already hot because it was like pouring gasoline on a fire, and it just took off for 2021, half of 2022, and then we saw the market. Obviously, interest rate historically went up the most they ever have in a 6-month period. And obviously, because inflation was taken off. So, and we're going to talk a little bit more about that also. But you can see in this, we're almost up to 1 million homes on the market through the United States. And definitely going 2017, 18, 19, I'm going to sit there and say in a couple months, we're going to be over that $1 million market. So over that $1 million homes, matching 2017, 18, 19. So stay tuned and you'll be able to see that. What about the economic growth? Well, it's pretty stagnant right now, but not recession-wise. Now, obviously, I would tell you almost like 99%, we're not going into a recession. But the one caveat out there is what's going on with the war that we're going through, because that's driving a lot of the market. Saudi Arabia is talking about pulling $7 trillion of investments out. So we're seeing a lot of that saber rattling, and it is affecting the market a little bit. But as far as recessions, remember, if you look at the economic growth of the GDP, 2 quarters in a row that we have negative growth, they consider that in inflation, they consider that a recession. And you can see we had one in Q1 2022 and another one in Q1 of 2025. But you can see in Q4 of 2025, we're still up. But again, you can see it's pretty much low. So the economic growth is slow right now. Now, what does that mean for the real estate market? In a normal real estate market, it means like if we go into a recession, because remember what the Federal Reserve does, like after the pandemic, if they want to pull us out of a recession, they lower the interest rate. And then when the inflation then climbs, and when inflation gets too high, then they raise the interest rate, almost like what they did. They pulled us out of the recession of the pandemic by lowering the interest rates, and then they put us right back into another recession, by raising the interest rates. So it's a teeter-totter that goes back and forth. So basically you can see this. Will we get 2 quarters in a row of negative GDP and be in an official recession? I don't know. I would say no, except obviously with the war and the saber rattling and everything going on with that. And let's talk about inflation, because this is when the Federal Reserve, if inflation gets too high, they will then raise the interest rates. And you can see going back to September 20th, it was like down to 1%. inflation. And obviously they lowered the interest rates. And look what happened in 2022, 23. Inflation just went nuts. So with those low interest rates, so what they did is they raised the interest rates again, and you can see they drove inflation down like we talked about before. And you can see it's pretty stable. Inflation has held between 2.6 and 3% for 2 years now. But it's not at the 2% that the Federal Reserve wants it to be before, again, they decide to lower interest rates. So they're keeping interest rates a little high. They're around 6%, give or take right now. And you can expect it to pretty much stay right around there. I mean, it might come down a little bit, it might go up a little bit, but for the most part, you can see that this is basically stable, at 2.5 to 3%. And the Federal Reserve, if they don't get it down to 2, they're not going to really significantly lower the interest rate. And so I don't think that's going to happen. So expect it to be, say, about where it is right now. Unemployment is the other thing. They look at the jobs, because if inflation goes up, one of the things is as more people are working, they spend more money. So when they see a jobs report that's really good, they'll actually raise the interest rate saying, oh, we're afraid that these people are going to start spending a lot more money, inflation's going to take off. But when you really look at it, I mean, you talk about a flat line of around 4% with, January being 4.4. You see, that one gap where you sit there and go, it looks like someone lost a tooth or something like that. There's a gap there. Well, that's because, remember, the government was shut down and we didn't have a reporting period, but it would have been right around 4.4%, just like it has been. You go all the way back for, almost 4 years, and it's been right around that 4%. So again, the market, as far as inflation, as far as the unemployment figures, is pretty steady. So I think that what the market that we're in right now is a market that we're probably going to see for a while. And what is that market? Well, that market is, as inventory grows, again, we've talked about this, it's a tale of two markets. If you're priced right and the home shows well, you're probably going to sell in 2 to 3 weeks. But if you're not, you're just not going to sell until you lower the price. If there's 10 homes on the market, you got to be 1, 2, maybe 3, most desirable. If you're like 4 or 5 or 6, you're not going to sell, because even as 1, 2, and 3 sell, more are backfilling into the market. So you've got to get up there and you've got to look at it realistically. You've got to be the best or maybe the second best value on the market, are, because of the neighborhood, because of the price, because of the condition, to sell. Because look what's happening to inventory in San Ramon. San Ramon, look at the inventory, has skyrocketed over the last 2 weeks. And when you look at pendings, they've stayed about the same. That's not good for the sellers, good for the buyers, and expect more inventory to come up. That's why, if you're a seller, it's still a great time to put your home on the market, because you're going to see this inventory. It's 130. You remember last year, we got up 170 or 80 and expected to get up there again. Now, the Danville market actually is doing really good. Over the last 2 weeks, actives have stayed the same. And look at the pendings have just skyrocketed. So Danville's a pretty hot market right now. If you're in Danville and you want to put your home on the market, now is the time to do it. But the Alamo market, again, you go back to just like San Ramon, last 2 weeks inventory has skyrocketed. Pendings have stayed about the same. Same thing with the Dublin market, except the last 2 weeks, pendings have gone up, but they're not keeping pace with the active properties. So overall, again, the inventory is going to continue to go up, and you're going to have a situation where prices are probably going to soften, because all those homes that aren't selling are going to have to lower the price to sell. And when you look at this, I mean, just like before, everything's selling at about 100% and selling within 2 to 3 weeks, because again, the homes that are selling are the ones that are coming out of the gate priced right and show well. And those are the ones that are selling. The market is such a varied market. It depends. You could be in Round Hill or West Side, which are pretty hot markets, have always been hot markets. And then some markets, even within, the center of Danville, vary. So if you want to really just get an idea of what your home looks like, we just met with someone the other day, and here's what I tell people. We're not there to list your home. We're there to be a consultant, and we're there to be an advocate for you and to give you the pieces of the puzzle we can. As I told these people yesterday, 80% of it, we can give you 20% of the pieces of the puzzle. The other 80% is personal, job-wise, downsizing, moving up, having kids. So it really comes down to what your personal situation is, but you need that kind of 20% to help you make the right decision for you on what you want to do. And that's what we can give you. And if the right thing is for you to sell, great. If it's, maybe to wait a year and everything like that, well, I've been doing this for 48 years, so I plan to be doing it for a few more years. And if not, I've got 2 sons that are in the business. And so we're going to be around for a while. So it doesn't matter to us whether you sell now or a year or 2 years from now. We'll be there when you need us. And if you want to reach out, give me a call. My cell number 925-487-6838. Or shoot me an email at joe@kehrigteam.com. If you want to learn more about the Kehrig team and have a full website that can do anything you need it to do, check out the schools, check out the demographics, basically, find out what's selling where, do a private home search, go to our website, learn more about the Kehrig team, go to our website, www.kehrigteam.com. Again, www.kehrigteam.com. Very fluid market right now. Make sure you tune in next time. Talk to you soon.